As various economies and national banks have hinted increasing their bank interest rates in the year to come, this presents a wonderful opportunity for high quality banks that can benefit from increased interest rates, and it can actually help with them with their profitability. In this video, we're going to be focusing on top 8 Canadian banks exchange traded funds which allow you to get exposure to and invest in high quality Canadian banks and really reap the benefits in terms of the prospects for growth, but also very high quality dividend that you're going to get through these ETFs. What's so unique about Canadian banks is that they have been wonderful businesses for many years, and in fact during the recession of 2008 these high quality banks did not cut their dividends, which is just remarkable and a testament to the high quality top banks in Canada. So let's get into it. The very first ETF for us to review is Hamilton Enhanced Canadian Bank ETF, the ticker symbol HCAL. It has a high dividend yield of 5.34%, and this ETF has been in fact the top performing Canadian bank ETF with a 59.86% annualized total return, which is just incredible. More specifically, looking at the performance of HCAL, the 3 months return is showing to be 14.35%, 6 months return of 14.19%, the 1 year return of 51.51%. This was in 2021 as of December 31st of 2021, and the return since the inception date is showing to be at 59.86%, which is just remarkable. What's more, in terms of the holdings, it actually gives you exposure to top 6 Canadian banks, namely Bank of Nova Scotia, Toronto Dominion Bank, Royal Bank of Canada, followed by Bank of Montreal, Canadian Imperial Bank of Commerce, and National Bank of Canada. The top 3 banks that we mentioned, Bank of Nova Scotia, TD, and Royal Bank, holds close to 75% of this overall ETF exposure. The inception date for HCAL was on October 14th of 2020. Before we move on and take a look at the second ETF, I wanted to also mention that Hamilton ETFs is also introducing another Canadian ETF. It's called Hamilton Enhanced Canadian Financial ETF with ticker symbol HFIN, and is expected to be starting trading on Toronto Stock Exchange as of January 27th. So stay tuned for that. The HFIN is going to have a target yield of 5%, which is interesting for those type of investors who are seeking a kind of a more reliable dividend yield with monthly distributions. Both of these Hamilton ETFs that we talked about, they do pay their distributions on a monthly basis. The second ETF for us to review is provided by BMO. It is BMO Equal Weight Bank Index ETF with ticker symbol ZEB. Here, as the name suggests, you're somewhat getting that equal exposure to top quality Canadian banks. In terms of the net assets under management, you have 2.7 billion assets under management. The last closing price for this ETF was at $41.25, and if you look at the annualized distribution yield is at 2.95%. The management expense ratio for this ETF is at 0.28%. Let us take a look at the holdings here, what holdings we have as part of the ZEB. You notice the largest exposure is to Toronto Dominion Bank, followed by Bank of Nova Scotia, Bank of Montreal, Royal Bank of Canada, Canadian Imperial Bank of Commerce, and National Bank of Canada, the top 6 Canadian banks as we talked about. And in terms of the price and performance, if we look at it, the past 1 year, we are showing 39.28% return. The annualized return for 3 years is at 18.79%. And the overall annualized return since inception of this fund is at 12.04%. Let us move on and take a look at our third pick. This one is offered by Global Asset Management CI, called CI Canadian Banks Income Class ETF. Available on Toronto Stock Exchange with ticker symbol CIC. The return for CIC is showing at 34.06% 1 year, and the annualized 3-year return is at 15.84%. It does pay its distribution on a quarterly basis, and it has a management fee of 0.65%. Here also you get exposure to the Canada's largest 6 banks with the potential for high income generation. Looking at the distributions, the 12 months distribution yield for CIC is at 5.22%, which is quite decent. And overall holdings, looking at it, as mentioned, you are essentially getting exposure to these top Canadian banks. Let us move on and take a look at our next pick. This one is offered by Royal Bank of Canada. It's an ETF offered for RBC called RBC Canadian Bank Yield Index ETF, the ticker symbol RBNK. Although it's offered by RBC Bank, it gives you exposure to, again, all the top quality Canadian banks, all of them. And if we look at specifically around some of the details, the management expense ratio here is at 0.33%. What it entails is that if you invest $10,000 into RBNK, in 1 year you would pay $33 in fee for that amount of investments. The total return is showing incredible. For 1 year return ending as of December 31st of 2021, it was at 40.3%, and annualized 3-year return was at 19.2%. Looking at the specific holdings here for the RBNK, you'd notice that you're getting exposure to Bank of Nova Scotia, followed by CIBC, Toronto Dominion Bank, Royal Bank of Canada, Bank of Montreal, and National Bank of Canada. In terms of the distribution yield for RBNK, the weighted average dividend yield is at 3.85%. Our next couple of exchange-traded funds in banking sector are with BlackRock. The first one is iShares S&P Toronto Stock Exchange Capped Financials Index ETF, the ticker symbol XFN. Here you are seeing a 1-year return of 35.53% and 3-year annual return of 18.19%. The inception date for this ETF was on March 23rd of 2001, and we have 1.8 or 1.9 billion dollars in terms of assets under management. Here, the distributions are paid on a monthly basis, and you're seeing a distribution yield of 2.84%. The management expense ratio here is at 0.61%, and in terms of the key holdings, you are seeing exposure to close to 30 different holdings here, including the top ones: Royal Bank of Canada, TD, Bank of Nova Scotia, Brookfield Asset Management, Bank of Montreal, CIBC, Manulife Financial, Sun Life, National Bank of Canada, Intact Financial, to name a few. In other words, here you're actually getting exposure to a number of other financial institutions and not just the top 6 major banks in Canada. So a little bit more diversification in that sense. The next ETF for us to review is iShares Equal Weight Bank and Life Co ETF, the ticker symbol CEW. It is showing a 1-year return of 33.7%, 3-year annual return of 18.66%. It was incepted on February 6th of 2008 and has close to $239 million in assets under management. It does pay its dividend distributions on a monthly basis, yielding 3.02%. The management expense ratio here is at 0.61%, and the risk indicator is at medium level. Here, you're also getting exposure to close to 11 different holdings, including Royal Bank of Canada, Bank of Montreal, Canadian Imperial Bank of Commerce, Bank of Nova Scotia, IA Financial, TD Bank, Manulife, Sun Life Financial, Great-West Life Co, and National Bank of Canada. A little bit more diverse than just getting exposure to the top 6 banks in that sense. The next holding for us to review is iShares Canadian Financial Monthly Income ETF, ticker symbol FIE. It has the lowest price in terms of the nominal price that you have to pay to get this ETF at only $8.45. If you want to just only use less than $10 to buy ETF, this could probably be the easiest one to get into in that sense. The 1-year return for this ETF is at 29.30%, and the 3-year annual return is at 16.06%. It was incepted on April 16, 2010, and does pay its distribution on a monthly basis, currently yielding a massive 5.68%. This one has the highest return in terms of distribution yield so far among the ones that we've talked about. And it does charge you a fee of 0.82%. Definitely highest fee so far among the ones that we've reviewed. Here you get exposure to close to 30 different holdings as well, with the top one on the list being actually another ETF, iShares S&P TSX Canadian Preferred, with ticker symbol CPD. And The next one as well being iShares Canadian Corp Bond Index ETF, XCB. With a mixture of different exposure to stocks and bonds, that's how they are giving you that higher income by close to 5.8% distribution. And lastly, the final ETF for us to review is BMO Covered Call Canadian Banks ETF with ticker symbol ZWB. As the name suggests, it is based on covered call strategy, helping to kind of reduce the volatility, but also in the meantime give you that secure stream of income. It helps to look, if you're looking for higher income from equity portfolio, the covered call strategy can help you get there. In terms of assets under management, you have $2.7 billion in assets under management. The yield here annualized is at 5.34%. In terms of management expense ratio, you're looking at 0.72%, and the risk rating is at medium level. If you look at the holdings specifically, you are seeing exposure to 37 different holdings, with the top of the major ones being BMO Equal Weight Banks Index ETF, ZEB, which we talked about is one of the top holdings, followed by direct exposure then to TD, Bank of Nova Scotia, Bank of Montreal, Royal Bank of Canada, Canadian Bank of Commerce, and you name it, as well as exposure through the covered call strategies. In terms of the distributions and prices, if you look at it, the return for this ETF 1 year is at 30.8%, and the 3-year annual return was at 15.03%. Lastly, just a quick look at these all 8 ETFs that we talked about for us to quickly compare them together and easier for you to reference it. We have sorted them out by the highest yield to the lowest, and you notice how much amount of assets under management you have, as well as the management expense ratio that you have to pay alongside the 1-year return and 3-year annual return. Thank you so much for watching this video. I hope you found it beneficial and you gained something of value from it. We put a ton of time and effort to put this video together, compared these top 8 Canadian bank ETFs. So I hope it was beneficial and you gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, please subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrencies, and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.